Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will move to the order flow by looking at the commitment of traders. Now, this is the COT data, so what the non-commercials and the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment the market is currently rejecting to the upside a quite strong area of previous monthly support here, again monthly support here, again here, again here, again here, and at the moment, as the market has just tested its zone, we could expect more bullish price action to be created away from this area. Now, dropping down on the weekly, what do we see? Now here on the weekly, we can see how demand and support that we have from a weekly perspective is exactly the area that the market has just tested here and is currently rejecting to the upside. In fact, we can see how when the market created this candle here, we had a huge wick created at this zone. Now this creates a demand area that if the market goes and tests it again, it has a high probability of rejecting it to the upside, which is in fact exactly what we are currently experiencing with the market getting rejected to the upside. And in a situation like this, we could expect more bullish price action to be created away from the zone. The problem is that if we drop down on the daily time frame, this is where things start getting a bit complicated, because from a daily perspective, we must notice how at the moment the market is still below the previous high. In fact, from here, all this previous move to the downside was created. And by the way, I did speak about EURUSD when the market was here, explaining all the reasons for which we could expect first this move to the downside and then more bullish continuation, which is exactly what the market is currently doing. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. However, as I was saying, we have a problem here because as we're testing the previous high, we don't know if the market will manage to break above the previous high. We could have a rejection to the downside, which in that case would put EURUSD in a situation where we don't really have any interesting price action, at least at the moment, because we would have a daily time frame which has unclear structure. However, where things would get interesting for EURUSD is if we do get a break above this high, because if we do get a break, all this previous daily resistance would become support here. So if we do get a break on the retest of this previous daily resistance turn support, how we could be approaching a potential rejection to the upside. Now, as usual, first, we have to check the commitment of traders. Now, the first thing that we have to see is the euro, because if you're checking the euro, you're actually already checking EURUSD, because all currencies on the spot are traded against the USD. So if we're checking the data for the euro, we're actually already checking EURUSD. And what we can see is that with the last report, we already started to seeing some increase in the net positions going from 139k to 144k. In fact, we can see how longs are currently sitting at 215k from an institutional perspective, with only 70k shorts that also got decreased even more with the last report going from 82k to 70k. So the euro is actually getting quite strong, which increases the probabilities that if we get a break on the retest, we could have a potential rejection higher. So if we do get a break on the retest, how we could be approaching this potential move to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames. So for our and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, we could be looking for a potential move to the upside for the completion of this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries, this kind of things, you want to learn more, I really suggest that you go and check out the mentorship program, which you can find at transparentfxtrading.com. In fact, now completely for free, you have the possibility to gain access to all my courses with all the rules of the strategies. You also have the possibility to integrate with one-on-one private mentoring, the market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, you will see that directly from here, by following these 3 easy steps, you have the possibility to get free access to the mentorship program. So I really suggest that at least you go and check it out at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.